Hey everybody, it's Don Miller. On Saturday, April 28th, 2018, going to share a video with you which covers a broad range of topics that touch on the charting and the bias grid and most recently Algo information that we've been blogging about and tweeting about. So I thought I would cover a number of topics here, and because we are talking about algos and some simulation here, it is important that we pay attention to the CFTC rule 4.41. And I know you can read, but I will read it anyway. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. Simulating trading programs in general are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. And see the full disclaimer at www.donmillerlive.com for additional important information. Again, because we are going to be talking about simulation, that is important to stipulate before we get going. So with that in mind, what I'm going to attempt to do here is to provide some education and some insight in terms of the algos as we are still toying with them a little bit, but I think it'll give you a good conceptual understanding using Friday morning's trade as a bit of a backdrop. And you'll notice here that the chart itself is fairly large. I was having some issues recording this, and it seems that the best way to get HD recording quality, which is important because I wanted you to be able to see some of these trade execution boxes, was to record the whole screen. So I'll toy with that a little bit. So getting into the trade action itself, you will note here that we're looking at chart from Friday, yesterday, April 27th, 2018, a little bit after 7 a.m. Eastern Time, a good fertile time to trade. And what the algo is looking for at this point in time is what I call sea of blue, meaning that biases 1 through 7 need to show all strength, all bull support. They all need to turn blue. And that coupled with a momentum indicator triggered to the upside. So that's essentially what the market, or what the algo is looking for in terms of trigger. And so what you're going to see here shortly, and it's waiting for a bar close. It's a 3-minute chart we're looking at, and then we'll get into some of these colors and whatnot in a little bit. So what you see here basically is a trigger. You've got the sea of blue, you've got the momentum to the upside, and you've got trades which have been executed, in this case 3 contracts at 2670.50. Now to the far left, again I apologize, it's so far to the left, but we'll work on the recordings in the future. You will see 3 profit exits to the north of 2, 3, and 4 points respectively, and a stop below, which in this case is a reference-based stop, meaning that it is not point or tick based, but it's actually looking in this case at the blue line, which is the 20-period exponential moving average of the 3-minute chart, and it's using an 8-tick or 2-point offset, meaning that price is going to have to trade below that trend support line by 2 points in order for it to close before it hits partial or full profit. So that's why you see a stop. It says 2668.50. You will see what happens is as the moving average climbs, you'll see that stop trail and rise as well. So we'll keep an eye on that. So a couple of things here. I tweeted a different algo Friday morning, which was also profitable, but in toying with the programming here a little bit, I did not like, even though it worked out, I didn't like the execution, mainly because if you look to the left, just around 6 a.m., you did not have full bull bias at bias number 7. You have a yellow color there. And therefore, under these current parameters, that trade will not have triggered. So I thought this would be more realistic. Again, it doesn't really matter whether the trade works or not. I just want to use this to demonstrate kind of what I'm thinking about and how we're going to use this in the room, and how I'm incorporating this into my own trading. So, you know, the 6 o'clock entry did end up working. First 2 exits went quick, and then the final one clicked on this run here, but I think this is far more realistic, looking at after 7 a.m. As well as the sea of blue. So wanted to point that out. A couple of things as well as we look at the bias grid. Bias row number 1, a lot of questions on that. That is cum delta. The delta chart that I often tweet and share is represented by the top bias line. Bias number 2 reflects momentum of the chart in which it resides, so in this case 3-minute momentum. Bias 3 is a higher time frame chart, momentum. And then 4 through 7, it's really a mix. You're looking at a number of variables. You're looking at various time frames, and suffice it to say that a lot of that data, a lot of those settings is proprietary, but suffice it to say also that you're looking at increasing time frames, increasing complexity in terms of variables, and thus the further you go down and have bullish or bearish support, the more conviction one has in trading in that direction, and that's exactly why the algo is set the way it is. Now, the algo can also be set to ignore all or certain biases. So I can basically also say that, you know, I do want cum delta on my side. I want 3-minute momentum on my side. Not necessarily concerned with some of the others, and I can turn those off and still get the algo to run. But right now it is, in this example, using all 7 biases, and it's why it triggered here and it did not trigger earlier under these parameters. The colors on the top chart, the backgrounds basically reflect where the market is trading compared to the 0 momentum line. So if it's above, you get a background of green. If it's below, it's a background of red, or pink. The darker colored bands, the vertical bands, represent shifts, so I can see that across the spectrum. And the colors of the bars themselves on the top reflects increasing or decreasing momentum, immediate momentum. So I hope that helps. And it's really a matter for me of using the single chart to replace 4 or 5 other ones. It really has helped me manage my mental bandwidth. I can target areas more quickly. I can make quicker decisions and trade accordingly. So what we're going to be doing as we look at this starting to trade up, and it will take out that first exit. You see now we show a position of 2. By the way, the middle green text box to the far left is your current position and your entry price and your current P&L in terms of ticks, or I'm sorry, in terms of points times the number of contracts. So one way we're going to use this in the room is we're going to have a tab, a worksheet that always trades this, and we're going to refer to it from time to time. We're still going to largely use it as more of a gray box, use it in terms of helping us with our discretion, but we can do some really great and fun comparisons to how our discretionary trading stacked up against these, how they run over time. The programming of this is somewhat new in that it's tying to the bias, especially in my own trading, and I have, in my 25 years of doing this, I have really never come across something that has been this intuitive and has really mirrored my particular trading style and has mechanized it to a certain extent, both in terms of the bias grid itself and as well as automation off the bias grid. So having a lot of fun with this, and really, now that I've got full time to devote to all of this with all of you as well, really looking forward to incorporating it into the DonMillerLive.com room. So what do we have here? We have 2 exits which are already taken out, 72.50, 73.50. You have the trailing stop now that has increased quite a bit, and there's 4.50 taking us out and closing everything. I want to stress, though, I'm not showing this because the trade worked out, right? I'm showing this to try to demonstrate how you can incorporate this sort of a thing in your own trading, and some of the variables, again, that we can use in the room as well as you can use if you do decide to use this in your own trading. It provides a great audit trail. You can go back and back test. You can play with the parameters, play with the variables. I've wanted to do this for a very long time and just have not had the time given other commitments, but this is now, this is my life and will be for quite some time. So I'm, again, thrilled that so many of you have asked to be a part of our ongoing effort, and really looking forward to that. Had a great discussion with Robin Dane this morning. Robin is great. I've worked with her in the past. She's been my coach. We had a personal coaching session this morning where she was able to clear a couple of the mental cobwebs out. She's worked with over 4,900 individuals, hedge funds, billionaires, no exaggeration, professional athletes, and she will be a part of our efforts. She will be there twice a month. That's included in your subscription. And then she's also agreed to a discount that the members, I've sent the email out to you folks, a discount for anything that you want to do over and above that. And that is just huge. That is just huge. Reminds me of the show Billions, right, where they have the firm and they have the trading coach available. We're just not in a physical building together, but we are virtually connected throughout the globe. So I again thank Robin for her willingness to do this. It's going to be so good for us. So again, I hope this helps explain a lot about the grid and the bias and now the algos. You can also see now, as it's continuing, the entrance into the U.S. Cowboy market, RTH Open, that I often talk about. Just look at the chart to the left. Look how relatively smooth it is. Now, by the way, I also had shorts turned off on this because we had bullish bias coming out of Thursday's trade. We had hourly support. I referenced that quite a bit Friday morning. That I chose to leverage off of the long supports to the south and take the triggers to the north. So that was done intentionally there. So anyway, I hope that helps. We'll kick it off or stop it here. And any questions, feel free to ping me. Take care.